Hey, are you a beginner and are you trying to figure out whether Fidelity Zero Fee funds are actually worth it? In today's video, I break this down and you'll figure out whether it's worth it for you or not. Watch this video. So before we begin, for the best millennial investing advice, make sure to subscribe to my channel, hit the like button and the bell icon to make sure that you're notified whenever I post a video every Make It Rain Monday. So are you overwhelmed by all these zero commission or zero fee funds out there and try and figure out whether Fidelity's funds are worth it? It was already confusing before Fidelity launched all these zero fee funds, but now with the launch of these new funds, maybe you're asking yourself, hey, what's better? Is Fidelity or Vanguard still worth it? In today's video, we're gonna break down exactly what these zero fee funds are. We're going to take a look at 4 of the major funds that Fidelity advertises and compare them to the comparative Vanguard funds and Fidelity paid funds. We're going to be RPFing every single one of these funds, looking at the risks, the performance and fees for each of these funds and comparing them, see which one's the best. And by the end of this video, you'll have a foolproof investing strategy of how to customize your investing portfolio. Now, before we start, I'd love you to comment below. Have you guys invested in these funds? I would love to hear your experience with them. Make sure to comment below. All right, so let's kind of get into it. If you ask me this question, hey, is Fidelity or Vanguard, which one is better? I would have said hands down Vanguard kicked Fidelity's ass over the last few years, right? It was only until recently where Fidelity started getting a lot more competitive. I started noticing this maybe about a year or two ago when they're lowering their expense ratios or the cost to operate a fund, right? What was really interesting was that when I first started Open My Roth IRA, I actually started with Fidelity. And I actually moved over all my funds to Vanguard just because they had better expense ratios, better performance and all that. So it's really interesting to see Fidelity on the come up. October 2019, they did something really, really crazy. They got rid of their minimums, they got rid of their transaction fees, and they started releasing funds with zero expense ratios. That really caught my eye because if you know, part of investing with index funds is keeping your costs very low. That's probably one of the biggest benefits of things like index funds. But are they really that good? And so today what I wanted to do was really break down the 4 different funds that Fidelity advertises. We have the Fidelity Zero Total Market Index Fund. We have the Fidelity Zero International Index Fund. We have the Fidelity Zero Extended Index Fund. And we also have the Zero Large Cap Fund, Fidelity's Zero Large Cap Fund. And we'll be comparing these against the Vanguard Investor shares, Vanguard Admiralty shares, and the regular Fidelity funds as well. We're going to see whether these funds are actually really that good. And we're going to be looking at 3 things. RPF. We're going to RPF this shit. So look at the risk, the performance, and fees with these associated indexes. And by the end of this video, I will give you my answer whether I'm going to move all my stocks, everything over to Fidelity or not. So make sure to stay tuned for the end. And I have a special gift for you guys at the end as well. All right, let's get into it. So the first fund that we have is the Fidelity Zero Total Market Index Fund, or FZROX, right? For y'all that don't know about total market index funds, they pretty much account for almost every single company on the US market. And this compares to the Russell 3000 index. Now, the cool thing about all these Fidelity funds, they're almost like generic brands, meaning, right, if you're going to claim that these are tracking the S&P 500, then you're going to get charged a licensing fee. So these funds are the closest thing that you'll get to things like the Russell 3000 without actually being it that way. With this particular fund, they track over 2,500 companies. They exclude companies with less than 75 million in market cap and with a 6-month trading value where it's less than 25 million as well. So it's really great. Now let's take a look at the performance of these. Now, FZROX is also comparable to Fidelity's FSKAX fund, Vanguard's Investor Share FTSMX, and Vanguard's Admiralty FTSAX. If you don't know the difference between investor shares and Admiralty shares, if you have a certain minimum, usually it's about $10,000 for certain of the funds. Some funds, especially the ETFs, they go all the way to 100,000 minimum, but basically they give you a lower expense ratio just for trading a larger volume as well. But let's take a look at the actual performance of these funds. All right, so now we are looking at the total market index funds for Fidelity at the moment. Really cool because this tool allows us to compare all the funds, look at the different things. And so let's start taking a look at the performance, right, before we start anything. So as you can tell, Fidelity's total market index fund, 26.11%. These are all pretty much comparable. Vanguard actually has a lower performance compare year to date. The zero total market index actually has the highest year to date. Keep in mind, all the zero funds have been out for less than a year, probably just for a few months at this point of this shooting as well, right? The zero funds come in first in terms of performance, then Vanguard, and then the regular Fidelity funds as well. And when we're taking a look at long term, there's really not a huge difference between all these numbers, right? Even if we're looking at the regular normal funds, also not a huge difference when we're taking a look at long term, because they're all pretty much tracking very similar things, right? Now let's go. Keeping that in mind, knowing that the performance is relatively the same, the major differentiating factor is going to be the fees. So what we want to look at are the fees, right? Currently these have no load, so there's no like transaction fees or anything like that. Where you really want to focus on is really the expense ratio. Vanguard has a 0.04% expense ratio. It's actually the highest of all of them, because 0.015 is a lot less than 0.04. Obviously the zero funds will win the expense ratio game because they're not charging you anything. Fidelity is probably taking a leading loss based off this fund, right? And so if we're looking at everything in terms of fees, the zero fund total market index wins out. Next comes the regular Fidelity fund and then Vanguard. So important things to keep in mind. The winners for the total market index fund, in terms of performance, FZROX or the Fidelity Zero Fund wins out. The fees win out for also FZROX. And as in terms of the risk, basically Vanguard and their pay funds have been in inception for a lot longer. In my opinion, you're at a lot higher risk with these zero fee funds, just because they have very little track record, if that makes sense. All right, so let's move on to the second thing. Now let's take a look at Fidelity's large cap index funds, or FNILX. If you are not familiar with large cap index funds, you might have heard a little something called the S&P 500. This pretty much represents majority of the stock market. I would say 80% of the US stock market's price are these top 500 companies, right? Essentially what Fidelity is doing is saying that it's a S&P 500 type of fund without saying that, it's tracking the S&P 500, because like I said earlier, there's a heavy licensing fee if you make that claim. Essentially, these are the top 500 companies in the US market, and they're some of the biggest companies out there. It's one of the number one things I recommend in my kick-ass investing course to start off with. And this is out of all the index funds, when people say index funds, this is probably what they're referring to. Now let's take a look at some of the similar funds with FNILX. Now you have Fidelity's FZIPX fund. We also have Vanguard's investor share class, VFINX. We also have Vanguard's Admiralty Funds, VFIX. And now let's RPF this fund. We're back in our screen again with this compare tool thing. So let's take a look at performance number one. So like I said, we have the Fidelity's brand name S&P 500 index fund. We have Vanguard's Admiralty fund and the zero fee fund as well. All right, so like I said earlier, all these zero fund fees, they don't have like a long track history, right? They've been out for less than a year, but let's take a look at year-to-date performance, right? If we're taking a look at year-to-date, it looks like the zero funds are doing a lot better. Keep in mind though, like I said, these funds have not been on the market as long as these two, so you can't make apples to oranges comparisons, right? With Vanguard's 500, it comes in dead last compared to Fidelity's regular 500 index fund, right? But we're not talking about a huge difference, right? Look at some of these percentages, look at some of these returns. They're pretty much all the same across the board, with Vanguard coming in dead last with performance. Now, keep in mind, Fidelity's expense ratios were a lot higher back then, so that's something to keep in mind. Based off year to date, the zero funds come in first, and Fidelity's regular fund comes in second, right? Now let's take a look at the fees. Obviously, when it comes to fees, Fidelity's fee funds are going to come in first, right? When we're taking a look at these Admiralty funds, again, 0.04, and we take a look at Fidelity's expense ratio, it's 0.015, which is a lot less than 0.04. Again, there is no load, but there is a minimal purchase as well. So that's one of the advantages of Fidelity funds over Vanguard at this point as well. So in terms of winners for year to date, Fidelity's zero fee fund FNILX comes in first, and obviously it comes in second. It comes in first in terms of fees as well. Again, the risk is pretty much the same since these funds have not been out for a while. It's hard to adjust the risk. We don't know if these are here for the long term. My guess they are, but we just don't know. So that is something to keep in mind as well. All right, let's take a look at the next one. Extend Market Index Funds, or FZIPX is the ticker. So essentially, if you take the total market index minus the large cap, so take the whole entire market minus the 500 companies, this is what you'll get is called the Extended Market Fund, right? These are stocks and companies that are too small to get to fit into the large cap category, and there's about 2,000 different stocks in this as well. They're based off of the S&P Completion Index, which typically holds more than 3,000 stocks that aren't included in the S&P 500, right? So Fidelity's zero fund fees actually have less stocks than the typical normal S&P Completion Index. Now, some of the similar funds with this are Fidelity's FS Max. We have Vanguard Investor Shares VEXMX, and we also have VEXAX for Vanguard's Admiralty shares. Again, there's a certain minimum when it comes to these funds as well. So let's dive into it. Let's RPF these funds. So we're in the compare tool right now. Let's take a look at the performance like we have before. So if we're taking a look at performance, you can tell that again, the zero funds haven't been in inception that long. So let's take a look at it. It's only been for a few months, and we can tell that Vanguard has the highest performance when it comes to 1 year. And if we sort this by performance, we can tell that Vanguard comes in number 1 for extended market funds. Fidelity's regular funds coming at 23.09%, and dead last we have Fidelity's zero fee funds, right? Keep in mind, it hasn't even been a whole year, so you can't compare apples to oranges, but it's important to keep in mind. So in this case, Vanguard actually comes number 1 in terms of performance. Second thing is Fidelity's regular fund. Last comes zero fee funds for Fidelity. Now, if we take a look at the expense ratios, let's take a look at this, right? So by the looks of this, Vanguard actually has the highest performance or highest expense ratios. Obviously, Fidelity's zero fund fees has no fee at all. And then we have a 0.045 expense ratio for the regular Fidelity fund as well. Keep in mind with Vanguard, there's a minimal initial purchase that you need to hit as well. So in terms of performance, Vanguard's Admiralty Fund VEXAX comes in first and obviously Fidelity's FZIPX zero fee fund comes in first in terms of fees. It goes to show you these are still new funds. It's hard to compare year to date, especially if it hasn't been around that long. All right, finally, we have the international index funds, or FZILX as is the ticker for the zero fee funds for Fidelity. Typically in the past, international funds usually have higher expense ratio, higher fees. They're designed to track the MSCI index. And basically what this is it basically tracks the most valuable companies in international exchanges, right? The top companies there. The free version actually holds less stocks than the normal index. So with Fidelity's zero fee funds, they hold about 2,300 while the normal index holds about 4,700. As far as similar funds, there's really three funds that we're comparing to. There's Fidelity's normal fund, FTIHX. We have Vanguard's Admiralty Fund, FTIAX, and we also have Vanguard's Investor Shares, VGTSX. So if you're ready, let's RPF this shit. Cool. Right now we are taking a look at all the international funds. And so let's take a look at performance first thing. So if we're comparing year to date, Fidelity's zero funds come in first at 17.33%. Vanguard comes in second year to date, and then finally comes with Fidelity's regular fund. If we're taking a look at 1 year out, basically they're pretty much all hovering pretty much the same. Fidelity's regular fund is actually performing the least best, but again, keep in mind this fund hasn't been out for a long time, so it's not equal comparison, right? So now let's take a look at the management fees. Vanguard has a typical minimum initial purchase. All of these have no loads. Obviously, Fidelity's zero fee funds will come in first in terms of having the lowest fees. Next comes Fidelity at 0.06%, and Vanguard actually has the highest expense ratio for this as well. So something to keep in mind. So in terms of performance and fees, FZILX comes in first, being the best value of both. So now that you know exactly how these funds compare to their normal funds with Vanguard and Fidelity, the most popular brokerages out there, you're still probably wondering, well, is it worth it to invest in this? While free is sometimes good, it doesn't mean it's always great for everyone. There's a few things to keep in mind. Currently, these are still relatively new on the market. At the time of the shooting, these funds have only been in existence for a few months, so they have to stay competitive with their normal full-fledged regular funds as well. These funds actually work really great for new investors because there's no minimum and there's no fees associated with it. And if you're younger, you can afford the ups and downs of something like this. And if you're new, it's really a great start to get your fund up and running and launched without any resistance. But it's hard to determine what's going to happen without more history about these funds. Obviously, previous performance does not indicate future results, but my guess is that most likely these funds will be pretty similar to the funds that they're supposed to initially track, or the indexes that they're supposed to track. And here's a huge reminder, they don't claim to track any of these indexes, but it'll be the closest that you get without actually being one of these indexes, if that makes sense. And also an important thing to keep in mind as you are tracking these, maybe on your own time, is that fees matter, but also performance matters too. But for investors like myself who have been on the market for quite a while and who have most of my funds in something like Vanguard, am I going to switch? That is a real $1 million question. And I will tell you this, not quite yet. Personally, I'm going to wait about a year to see the performance, see how Vanguard will actually stay competitive, because there's no way, based off the data so far, there's no way that their performance is not beating Fidelity, and their fees are a lot higher than Fidelity's as well. So I'm very curious to see how Vanguard will compete with Fidelity in the upcoming months. Remember, it's pretty risky to take your whole entire portfolio and throw in these new funds. Just because there's no fees, like I said earlier, performance matters. And it's a huge risk to switch all of it into these new funds. And also what I like about Fidelity's zero fee funds is that it puts pressure on the other companies as well. You saw quite recently, we saw Charles Schwab's introduce zero commission trading as well. So TLDR, basically for new investors, highly recommend you could probably start with this. With more seasoned investors, hold off for a little bit. Feel free to invest money now if you want into it, but just be very cautious about converting your whole portfolio into these new funds. So now that you know exactly whether these funds are worth it for you or not, you're probably wondering, do I have any other gaps in my portfolio? Well, say no more, fam. I'm here to plug your money leaks and stop you from losing money with my kick-ass checklist. I've actually created this 12-point checklist to help you identify your leaks in your portfolio to get higher returns and increase your passive income for your kick-ass portfolio. And this is all for free. Link is in the description below. And also, if you're interested, I've also created a free investing masterclass on how to set up and automate your Roth IRA in just over the weekend. Think about it. You got to put these zero fee funds in some sort of taxable account, right? So if you like this video, please let me know by liking it below and making sure that you share it with your current fellow kick-ass investors. Also, comment below how this video helped you, and I would love to kind of hear, are you going to invest in these zero fee funds? I'd love to hear what you guys are going to do. Let me know in the comments. As always, get off your ass, start investing, start kicking ass at investing. I will talk to you guys later. Take care. Bye.